All right, everyone. Thank you so much for joining today. We really appreciate you taking the time out of your weekend to be a part of our short launch event here. If you're watching the recording online, thank you for taking some time out of your day to go ahead and learn a little bit more about what we do at Kisher Capital. My name is Eric Schlosser. I am currently the CEO and co-founder of Kisher Capital. I also work as the primary lead advisor of the firm. I have a bachelor's degree in business with a 4.0 GPA. I previously held the SIE Series 7 and Series 66 licenses. I currently hold a Series 65 credit, which allows me to work as a financial advisor, and I also hold a life and health insurance license in the state of Illinois. What we're going to start talking about today for Kisher Capital is a little bit about what we do. So we are a registered investment advisory firm. We're based out of the Chicagoland area. Our primary goal is to help those we serve connect their finances to their future. We really accomplish this goal through investment management and financial planning, which we'll talk about in the next couple of slides. First, what we want to share is a little bit about our values. The name Kisher comes from the Hebrew word meaning he connected. That really reminds us to tie our finances to our future and really the future that God intended for us. As an RIA in Illinois, we are fiduciaries. So we are legally and ethically committed to putting your best interests first. One of our top priorities, first one would be making sure that the people we serve are put first. We want to understand your family, your goals, your faith, and really your calling and purpose here to build financial solutions that reflect those values. Second priority for us is integrity. We are fiduciaries. We legally have to work in your best interest, and that's our priority. You have to come first above all else. Third, we really focus on communication. We want to make sure that we are communicating with those we serve in a timely fashion, making sure that you have full clarity and understanding in case you have any questions or any requests that need to be taken care of. So a few of the common financial problems that people talk to us about, first one would be a lack of a destination. So most people generally know they need money to retire, or they're hoping for another good stimulus check or larger Social Security payout later on. Generally speaking, though, most people don't know how much is enough to really accomplish their goals. Second problem that we see typically is uncertainty of direction. So some people will be able to figure out really how much they need, but then they need to know the potential risks that they face and make sure that they have a plan in place in case any of those risks actually present themselves. So we see uncertainty of direction moving forward. Third, most common problem we see for people's finances is isolated investment strategies. So people will be able to understand how much they need and some of the different risks that they face, but they don't actually have a roadmap or a plan to implement those changes they need to make, or how they need to connect their investments and their finances to their future goals. A couple of different ways that we can help. We primarily start with a financial plan. We really believe that that is the foundation for people's finances, making sure that you understand your cash flow, retirement strategy, income strategy in retirement, debt management, budget planning, really making sure that you have a good framework that you can work from. Secondarily, after we build a plan, we make sure that we continue to manage that plan and build on it. So it's not something where you want to sit down, do a lot of work, take the time, and then never go back to it. We really believe in continuing to build that plan because your life is going to change. If you think back 5, 10, 15 years before, your life was very different from where it is now. So continuing to manage that plan is very critical for your finances. Third, obviously, then connecting your investment strategy and helping those that need the help to manage their investments in accordance with their financial plan. So we use effective diversification. We also focus on asset classes, so not just diversifying to diversify. It has to be built with a purpose. So those are a couple of the different ways that we help those we serve. Next up here, just talk a little bit more about financial planning, because it is more than just balancing your budget and saving in your 401k. Really, when we look at financial planning, we think about tax planning, education savings planning, income strategies in retirement, even Social Security planning. We also look at estate planning as well. So what legal documents might you need to have in place? What should you be considering? How can you get those taken care of? We obviously don't provide any legal or tax advice. We have partners that we work with to take care of that. But we do want to make sure that you're aware of what you have in place or what you might be missing. So that's a little bit on financial planning. Next slide here actually shows one of the tools that we use called Right Capital. This is our primary planning software. So this will show you details across the board for your finances, whether you want to look at your expenses, healthcare cost, insurance premiums. You can even see here, you can price in your goals, property value, Social Security income, even tax payments down below, and the split between federal and state. It really gives you a good overview of where you currently are, and then we can help you build a plan to make sure that you get to where you want to go. So you can see on the right-hand side there, you can get a probability of success through a couple different simulations that the software can run, and it can also show you that for your assets as well, based on the plan that we develop. Next slide here is going to show us a little bit of the investment analysis software that we use. So we use a tool called Quanti. This really helps us to analyze someone's current portfolio to see where any weaknesses might be. And it really helps us determine if any changes should be made. More often than not, generally speaking, people will have funds that tend to overlap. That's not always the case though, so we make sure to do our diligence, make sure that you understand where you are currently, and understand if there's any risks that you should be avoiding that you currently face. So that's a little bit about some of the software we use. Primarily, we serve retirees that are 5 to 15 years from retirement. That tends to be our specialty. But we also work with families that have planning needs, as well as businesses and nonprofit organizations. We've worked with many people at different stages of life and different businesses and organizations at different stages as well. So we're always happy to connect and help in any way we can. But our primary specialty is working with people that are 5 to 15 years from retirement. So with that, I'm going to go ahead and turn it over to our Chief Investment Officer. That's Josiah DeFord. Josiah, go ahead and tell us just a little bit about your family and background.
Thanks, Eric. Thanks, everyone, for joining here. As Eric mentioned, my name is Josiah Ford. I help with kind of the investments and the compliance here at Kisher Capital. A little bit of my background. I have a bachelor's degree in mathematics. Kind of my professional qualifications for giving kind of investment advice is I've taken the Series 65 license. I also sat this year, took the CFA Level 3 exam as well. I am married and currently expecting my first child this fall. So what I wanted to do today is share a little bit about our investment strategy and kind of the three core components of that strategy across all of our models. We employ time-tested investment principles coupled with active risk management in all of our models. So what are these kind of three building blocks that we use? The first one is rewarded equity factors. So our equity allocations are determined using long-term rewarded factors and top-down market analysis. So rewarded equity factors, they help us understand the risk and returns of stocks, right? So some of these common factors that we see are value, low size, low volatility, high yield, quality, and momentum. So currently, two of the factors that were a little bit more heavily weighted in our models are quality and momentum. So quality, those are companies that tend to have stronger earnings and higher profit margins, as well as lower debt. As well, we're also a little bit more weighted into momentum stocks. So that's talking more about the price of how those stocks are moving. Momentum is a factor that really looks at, how have companies performed in recent history, and the ones that have performed more positive, we tend to invest more in those, right? So the recent winners, we want to invest more in those than the recent losers from a performance standpoint. The second building block is our fixed income, our dynamic fixed income. The reason we have fixed income funds in our models is they provide some income and stability to our portfolios. Fixed income funds that are dynamic, what does that mean? What are we trying to get there? We're trying to look for bonds that have a fair interest yield, right, a fair return compared to the market. as well as a high likelihood of actually paying that interest, right? We want to look for funds that are holding bond positions, right, that have those criteria, and then removing those positions, those bonds, selling those, if the underlying company is no longer are meeting those qualifications. The third and kind of final building block is liquid alternative funds. So those funds, they're built to behave differently from the broad market, equity and fixed income. They offer protection during market stress periods. These funds are selected to cushion against equity and fixed income volatility. A good example of this would be gold or commodities. Those tend to have different price movements, their own cycles compared to the broad market, right? That just helps create a smoother ride. So we want to have a small but significant portion of all of our investment models in these liquid funds. Second thing I want to talk about here is faith-based investing. So we have some faith-based models, right? And they employ biblically screened investment funds, right? What these funds do is they screen out stocks that are kind of involved in or support kind of this list of items here. So, abortion products and activism, LGBT activism, sexually explicit content or services, gambling, tobacco, alcohol, and THC products. So they remove any investments in those companies, and those models exclusively invest in those type of equity funds. What we're looking at here is an example of a screening. Inspire does a great job screening positions and funds. We use some of their funds because they have some funds that they've screened out all the stocks. You can see here they have kind of a negative impact score, meaning they invest in companies. The S&P 500 has a bunch of stocks that violate some of these criteria we mentioned. So Apple, Amazon, eBay, Google, and Inspire funds or other faith-based funds, they would tend to eliminate or avoid those funds. And this is kind of a good way to kind of see what that would look like if you were to just invest in the S&P 500. So kind of finally here, I like to look at a market update. So where are we at? Where are we at this year? First off, the returns as of July here, the S&P's up about 8%, and then the Nasdaq's up about 10. We've seen in the last couple of days, it's a little bit higher by 1% or 2, and the Dow Jones as well, about 4.5%. It's actually moved up just in the last couple of days. It's moved up 1% or 2. One interesting question here: why the difference? Why do these two indexes almost twice as large in performance this year? That's largely due to a higher amount of technology in these two indexes, S&P and Nasdaq, driven from kind of these AI, some reality and some promises of growth. So that's kind of driven that. Two big headlines we've kind of seen this year. The first one is the equity markets have continued to hit all-time highs. We've seen some strong earnings behind that, but some of that has just been purely price growth and kind of speculation as well. Again, behind these sort of technology and AI promises. The second big headline is conflict at the Federal Reserve. So the Fed, they've continued to hold their policy rate, their interest rate steady. They haven't lowered it, even though they faced a lot of pressure from the president, as well as now some of their own internal members. We do expect to see the start of some rate cuts, potentially this year, if not the start of next year. And that can have some really significant impacts on all financial markets and inflation as well. If that's done very quickly, that can actually lead to some more inflation. So those are two things that we're really keeping an eye on, right? Do earnings continue to sort of back up this growing stock market returns? And as well, what happens with the Fed and interest rates? Because that can have, again, very significant, very positive or very negative, depending on how those interest rates turn out. So I'm going to turn it back to Eric here. So thanks for all your time. And we do have market updates that we're doing every month. So, we see a lot of news headlines about financial markets, and what we're doing every month within the first week is really quick 3 headlines, little summaries of what's going on, as well as some other financial things in the next month or 2 months for folks to look at. So that's on our website under articles. We're also posting them once they're all written up every month on social media as well, LinkedIn. So feel free to take a look at those and let us know if you ever have any questions on those or our investment model. So some of our kind of goals going forward, kind of corporately, is one is we want to have recurring client connections. So one thing that's really important to us is making sure we're checking in with you on a regular basis, at a bare minimum, at least annually, to make sure that your investments and your plans, right, are on track. And as well as, we all have life changes, and that changes how we should be investing and saving and all of that. So one of the things is we want to make sure that we're connecting regularly with you. Second thing is we're developing strategic partnerships. Those are with other professionals, sort of outside of our sort of expertise. And that's to help you, right? So you need tax help. We want to find someone that we can rely upon to give you advice on tax. That could be legal. And we'll look a little bit more on that in a second. We're also looking to kind of grow our team over the next year or two, add some more people to support us from operational, marketing, and compliance as well as expanding our advisory team. So expanding our advisory team increases our ability, right, to grow the number of people we serve while maintaining that high level of service and regular connections with everyone. This is a list of kind of some of those strategic partners that I mentioned. Joelle here is great. She works kind of as a travel agent, helping kind of people set up some affordable vacations and all of that. So she's a great resource if you need someone to help out with that. Andrew from Red Balloon, they work with kind of employment and helping people find jobs. Taylor Miller is a local realtor. He's in the kind of DeKalb area, so he's great to work with. And we're continuing to evolve and find some other partners as well. We do have, I will say, on the strategic partners, we do have some all those folks listed on our websites, and feel free to reach out to us, right? If one of those three, or if you see any of those on the website, you're like, hey, I'd like to connect on that, right? I'm in kind of that DeKalb area, I need to buy a house or something like that. Just let us know, and we can connect you with Taylor, or if we have another partner we think would be, a better fit in that situation. So.
Perfect. Can you hear me okay?
Yep, you're good, Eric.
All right. Sorry about that. Wouldn't be a great launch event without a few technical issues. Like Josiah said, we are building out some of our referral partners. We do have an attorney that we work with. Just for compliance reasons, we have to be careful about how we list him and how that works. But we do have an attorney connection who does work in the state of Illinois. If you're interested, we'd love to connect you with him. If you can just go back for a moment back to the strategic partners, just a couple notes that I want to provide for Taylor Miller. As a local realtor, he works in a couple different counties, specifically in Illinois, Ogle County, DeKalb County, Winnebago County, and Boone County. For Andrew Krapachetz, he leads Red Balloon, which is the recruiting firm. Whether you're in Illinois or in any state in the U.S., he can work with you. They can make sure that you have your resume uploaded. If you're looking for a new opportunity, or if you operate a firm and you're looking to make some new hires. Josiah spoke about Joelle as well, but she is a wonderful travel agent. I've worked with her personally. She does a great job at making sure that she communicates with you quickly and makes sure you're well taken care of. So as we have other partners, we'll be listing them on the website. Really, our goal is to provide additional benefits for you and for those we serve. So if there's anybody you'd like to see as well, or maybe another partner that you think would be helpful, we'd love to have your feedback, whether that's after this meeting today, or if you just want to send us an email to info@kishercapital.com. We'd love to hear your feedback. So with that, we're going to go ahead and conclude this presentation. If anyone has questions, you can send them in the Zoom chat. Otherwise, if you don't have questions, we just really want to thank you for attending. If you're watching this online, thank you for watching through this recording and for bearing with us with some of those technical issues. So